this video, we are going to be talking about the New Hampshire Purchase and Sale Agreement. We're going to be talking about what is contained in the document, what everything means, but also how to make sure that you've filled it out properly and that the document is in compliance, which is a really important aspect of protecting our clients. So to get started, the very first field that you see here is the effective date. This is something that actually gets filled out by the agent on either side of the deal after the purchase and sale is fully executed. And what that means is, what is the date, the latest date at which all parties have signed and initialed where necessary and received a copy of that completed, signed and initialed purchase and sale agreement. That becomes the effective date. Again, that is filled out by the agents after everything is signed, initialed, and sent out to everybody. And then once we have that effective date, that is the date from which all deadlines in a contract are counted. So the effective date is actually day 0 for all deadlines, and then the day after the effective date becomes day 1. In New Hampshire, contract deadlines are all counted as calendar days, and the deadline is at midnight, or actually technically 11:59 p.m. On the last day of that deadline. So that's how you count all contract dates unless it's otherwise specified. Once you have the effective date, you go on down. So section 1 of the agreement is some pretty basic information. This agreement made this day of, so this is going to be the day that the agreement is actually written, not necessarily the date that it's signed. This next section talks about the seller. So in this section with the seller information, you really want to be getting that from the property deed. You don't want to be looking at a property card or the property disclosure because if someone else made a mistake at that point, you may be using the wrong information for the seller name. So you do want to look at the deed to get the seller's name. Next here, you're going to be filling out the seller's street address, the city and town, the state, and the zip code. This might be some information that you have to get from a listing agent if you're representing the buyer, or usually the property deed should say their address right on there, and you're safe to use whatever it says on the deed as well here. In the next section here, you're going to be writing the buyer's information, and again, you're going to put their street address, city, town, state, and zip code. Most times a purchase and sale agreement is written by the buyer's agent, so you're probably going to have this information if you're writing out the purchase and sale. Once you fill all of that out, one thing to keep in mind is that sometimes a property is sold or sometimes a property is purchased in an entity's name rather than an individual's name. So that would be something like Affordable Mobiles LLC. In those cases, the actual LLC is going to be listed as the buyer or the seller. And then when the member of that LLC signs, for instance, they'll be signing as their name. So Mark Zoller, member. You have to have both their name and their title within the organization or the entity when they go to sign, but their name won't actually be listed on the purchase and sale. The entity will be. If you do have, it can be a little confusing. If you do ever have questions about that, don't hesitate to ask. In section 2 of the purchase and sale, this is talking about the legal description of the land that is being purchased. So here you'll see agrees to buy real estate situated in city and town. Obviously, that is the city or town that this property is located in. Located at, this is going to be the street address. County is going to be the county. And then right here, book, page, and date are going to be the current book, current page of the deed, and then the date that deed was recorded. All of this information should be on the deed. Frequently that is provided by the listing agent. If it's not, you should be able to also look it up in the registry of deeds if you need that. In section 3, this is going to be talking about a lot of the money and the accounting for the purchase and sale agreement. This right here, this gray box, this is actually going to auto-populate, and it's going to be the written purchase price. And it's based on the numerical purchase price that you fill out right here. We're going to use $100,000 for the purposes of this particular contract, just because it's easy. And you'll see if there's some math that's about to be involved, and that'll keep it simple. So if we were to write $100,000 in here, you can see that it automatically populates right here. So that's the written dollar amount. This is going to be the numerical dollar amount. That's the purchase price of the property. Next, it talks about the earnest money deposit. So it says a deposit in the form of blank. Here you're most likely going to see either personal check or bank check. One thing to keep in mind is that if this is going to be a pretty fast turnaround, you're probably going to want to, like a cash offer, for instance, you're probably going to want to put a bank check here. Whenever a personal check is used for an earnest money deposit, those do require at least 10 business days to clear. So sometimes if you have a very fast turnaround and you try and use a personal check, that check doesn't actually have time to clear before the closing, and that can create some headaches. So in order to avoid those headaches, if you know you have a fast turnaround for a closing, I would definitely recommend having your buyer provide a bank check for that earnest money. Next, it says it is going to be held in an escrow account by, so the escrow agent here, it's frequently the listing agency in New Hampshire, not always, but frequently. It honestly can be either the listing or the buyer agency, as long as they have an escrow account, which Keller Williams Coastal and Lakes and Mountains does. Another thing that is available to you is a lot of times the title company, if you know what title company is going to be used, they will be willing to act as the escrow agent for you, or for your client rather, or the buyer. And one nice thing about that is then when you get to closing, you're not worrying about making sure the earnest money gets where it needs to go because it's already at the title company. So that can save you some extra steps, and it is just one more tool to keep in your pocket if you'd like to use it to make sure that things go as smoothly as possible for everyone on closing day. So you're going to fill out the escrow agent, and then it says has delivered or will deliver. I think that's pretty self-explanatory. Frequently we see will deliver, and in those cases, somewhere between 3 and 5 days is what we see most often. But that can honestly be any amount or any number of days that is agreed to by both the buyer and the seller. A deposit of earnest money in the amount of X, so this is going to be the amount of that check. $1,000 is pretty common in New Hampshire. That being said, for higher priced properties, or if you are a buyer's agent wanting to make, or a buyer rather, wanting to make this offer look more attractive, a higher amount there can look more attractive to the seller. And it can kind of indicate that the buyer is more serious about the property. So just something to keep in mind there. Again, that can be any amount that both buyer and seller agree to. This next section talks about buyer agrees that an additional deposit of earnest money in the amount of blank will be delivered on or before blank. So this is going to be a second deposit if that is something that the buyer and the seller agree to. Second deposit, same as a larger first deposit, can just indicate a higher level of seriousness and perhaps make an offer more attractive in a multiple offer situation to a seller. That amount is pretty variable because it's not something that's necessarily as common practice. So any amount, honestly, that the buyer and the seller agree to is fine there. And then frequently we will see either a date there, or you could put after satisfactory inspection or after satisfactory appraisal tend to be two things, or two triggers for a second deposit rather. This last blank in section 3 is actually, this is where the math comes in. This is going to be the balance due at closing. So to get this amount, you're going to take the purchase price that we put up here, that $100,000, and then you're going to subtract either one or both escrow deposits if there are two escrow deposits. So if, for instance, we put $5,000 as a first deposit and $5,000 as a second deposit, the balance that you're going to put here would be $90,000. So that's just that $100,000 minus the two $5,000 deposits, and now you get the balance due at closing. Alrighty, so here in section 4, this talks about the deed. Marketable title shall be conveyed by a blank deed. This is going to be a deed type here, and most frequently you're going to see a warranty deed. There are a couple of other deeds that you might see. So sometimes a seller will only be offering a quitclaim deed. If you are purchasing, or if your client rather is purchasing a foreclosure property or an REO property, you may see a foreclosure deed listed here. Or you could also, if it is a property that was in an estate, you could see a fiduciary deed in this section. So Those are the different types of deeds. Make sure you do understand the difference between the different types of deeds to make sure that you can explain them to your clients. But you may see any of those here. And this does say it has to be a marketable title, free and clear of all encumbrances, which that is going to be established by the title search that the title company will do on behalf of the buyer. So they'll just make sure that the chain of title is clear so that there shouldn't be any issues as far as ownership or clear title when the property is transferred to the buyer. Paragraph 5, transfer of title on or before. So this is going to be your closing date. It does say on or before. So if everything is clear in advance, you could certainly close this earlier than the closing date here if all parties are in agreement. And that's always fun. If it's going to be anything later, you will need an addendum or an extension that all parties agree to and sign. Keep in mind for a seller, this closing date on or before, that is the date at which your client, the seller, is expected to have all of their things out of the house. They're moved out because at the closing, the buyer is going to take possession of the property. Also in this section, you can establish a place that the closing will take place at. We do frequently see this listed as TBD. A location for a closing can easily be nailed down closer to the closing date. But if you know your buyer has a preference when you're writing up the offer, or if you know the seller has a preference, you can definitely fill that out in advance. In section 6 of the purchase and sale, this talks about possession of the property. So kind of what I just mentioned, the date and the time for, well, a time isn't established, but the date for transfer of title, that is the date that the seller is expected to be entirely moved out of the property, all of their personal belongings moved out of the property. The home is in broom clean condition. And keep in mind, broom clean, make sure that buyer and seller understand this. Broom clean means like swept and vacuumed. It does not mean professionally cleaned. But at that time, everything should be removed from the property. It should be in broom clean condition. If there were tenants, the tenants should be moved out unless otherwise agreed to in the purchase and sale. And at that transfer of title, at that closing, the buyers are going to be given keys. And once everything is signed, that property no longer belongs to the seller. The seller no longer has any right to be there. Again, unless there's another agreement, but frequently there's not. So keep that in mind. If there are going to be any exceptions, like say the buyer and the seller agree that certain things can remain at the property, or maybe there's a tenant who's going to stay in place, something like that, you're going to list those exceptions here in section 6. This does also establish the amount of time prior to the closing that the buyer is able to do that walkthrough. Frequently we see this be 24 hours. Honestly, as a buyer's agent, since again, buyer's agents are typically writing the purchase and sale, I would really recommend keeping this at no longer than 24 hours. Ideally, you want your buyer to be doing a walkthrough as close to the closing time as possible. If at all possible, we would recommend doing the walkthrough and then going straight to the closing, because you do want to make sure that the seller has had time to get everything out of the property. Once your buyer does close on the property, they have accepted it in whatever condition it currently is in. So if you don't do a walkthrough right before closing and then you close on the property and you get there and there's a whole bunch of stuff there, your buyer is now the owner of a whole bunch of stuff. Or if you don't do a walkthrough and the tenant didn't move out, your buyer just purchased a property and is now immediately a landlord, and would have to go through all the necessary legal steps to evict that tenant. So that's why a walkthrough is so important, and really trying to keep it as close to the closing as possible is really key. Section 7 deals with representation. So this is going to be both the buyer and the seller agent here. One of the things that you're going to, it doesn't matter what order they're listed in, buyer or seller agent first, that's not important. You're going to list the agent's name here. You're going to list their agency that they're affiliated with here. Then you're going to mark, are they a seller agent, buyer agent, facilitator, or disclosed dual. You're going to do the same thing with the agent on the other side of the transaction here. So their name, their agency, and then what is their role in the transaction. Our office does prefer to only see one name in each of these sections here. So obviously the listing agent's name is going to come right from MLS. That should tell you who the listing agent is going to be. And in our market center, on our team, Even though we do have multiple people listed on our listing contracts and on our buyer contracts, we have just the primary agent listed. So Mark Zoller and Michelle LaCroix are listed on all of our contracts, just for legal purposes, since they're frequently aware of everything going on in a transaction. But whoever the primary agent is who is working with that client, just their name needs to be listed here as either the buyer or the seller agent. You do want to make sure that the names are spelled correctly and that the agency is listed correctly. Those will be things that compliance will call out and that you will have to get corrected if something is wrong there. And also making sure that the correct little checkbox is selected here is also very important. Notice of designated agency is going to be if both agents in the transaction are with the same brokerage. So because we are with Keller Williams Coastal and Lakes and Mountains Realty, anytime someone from Keller Williams Coastal and Lakes and Mountains Realty is on the other side of the transaction, you are going to check this notice of designated agency. The one exception here is going to be if there is a disclosed dual agent situation. So frequently, if we sell one of our own listings on the team, there's going to be a disclosed dual agent situation, since Mark and Michelle will likely be listed on both sides of that transaction. And in those cases, even though both are Keller Williams Coastal and Lakes and Mountains Realty, you would not need to select notice of designated agency because the disclosed dual agency trumps the designated agency, if that makes sense. If you have any questions about that, definitely don't hesitate to let us know. It can be a little confusing when we get into a disclosed dual agent situation. This next paragraph here is about insurance. So this essentially says that if something happens to the property once it goes under contract, you're going to set a dollar amount here, and if the damage to the property exceeds that dollar amount, the buyer would then either have the right to terminate the contract, or they could make an agreement with the seller as to how repairs are going to be made to the property and handled. This is really intended to protect the buyer. If you are representing your buyer, you want a lower amount there. $1,000 is pretty common to see there. If you're in a multiple offer situation trying to make an offer look more attractive, or if you're representing the seller, you might want to see a higher number there, because again, a higher number there would be more advantageous to the seller. So just something to keep in mind when you're filling this out or reviewing a purchase and sale. Let's see. So that is the first page, and those are really, I think I covered pretty much all the important things to keep in mind on the first page. Again, really everything on the first page should be entirely filled out. The one exception to that might be here in paragraph 6. Frequently, if there are no exceptions to this possession paragraph, you might see this left blank. My personal preference is to put in NA, but if it's left blank, it should not be called out by the compliance department. So just something to keep in mind there. We're going to scroll on to the second page. So on the second page of the purchase and sale, this very first paragraph, there is absolutely nothing for you to fill out. What this says is that if there is a title defect that is discovered when the title search is being completed by the title company, the seller it says a reasonable time and then defines that as 30 days from the date of notification of said issue to remedy the defect. This is very important for both the buyer, the listing agent, and the selling agent to understand, and both the buyer and the seller, because it means if there is a title issue, the seller essentially has a 30-day extension, depending on when it's discovered, but they essentially have a 30-day extension built into the contract. So even if that 30 days goes past the closing date, that is written into the contract. They have that 30 days to remedy the issue. So it's an important thing to understand, particularly if an issue is found. The cost of the title examination, as it says in this purchase and sale, or the title search, that is a cost that is paid for by the buyer. They're making sure that they're getting a clean title, so it's really to protect them. In paragraph 10, this talks about prorations. So you're going to see property tax prorations, condo fees, special assessments. It lists everything out here. Those are all going to be prorated on the closing statement. Buyer in New Hampshire, the buyer also is assumed to be paying a fuel proration. So unless it is otherwise specified here, the buyer will pay for any fuel remaining at the property, and that's going to be calculated as close to closing as possible using whatever the current market rates are for the fuel that is used by the property. One thing to keep in mind here, so, if assuming that the buyer is going to pay the fuel proration, you really don't have to put anything in this proration section. If your buyer does not want to pay a proration, don't just put NA here. What NA doesn't actually mean anything, and we have seen that before. So if there is not going to be a fuel proration, you want to be very specific here and say, no fuel proration, or buyer not to pay for remaining fuel. You need to be very specific here if for some reason there's not going to be a proration. NA really doesn't mean anything in this section, so just keep that in mind. But in general, this paragraph is pretty all-inclusive. Again, those property taxes, condo fees, everything is going to be prorated as close to closing as possible. Also keep in mind that day of closing in New Hampshire is the responsibility of the seller. So they do need to keep utilities on through the day of closing. As far as the proration goes for rent or taxes or anything like that, the date of closing belongs to the seller. The buyer is responsible beginning the first day after closing. Property included. So this is a very important paragraph. It does say all fixtures. What is a fixture? So one of the easiest ways to describe or differentiate between what is a fixture and what is not a fixture is if you were to take the house and turn it upside down and the item did not move, that is a fixture. Anything that moved is personal property, and that does not stay with the property. Anything that did not move stays with the property. So that means your curtain rods, those are fixtures. The curtains themselves are technically personal property, but the curtain rods stay with the property because those are fixtures. A television mount stays with the property. That is a fixture. Arguably, the television itself would not stay with the property. That's generally accepted. So those are really important things to keep in mind when you're writing out a contract, because if anything like that is something that your buyer wants or specifically doesn't want, like if they really hate a light fixture or a curtain rod and they want those gone, you should specify that in the contract. Otherwise, it's a fixture and it stays with the property. It becomes your buyer's problem once they purchase the property. Similarly, other things, actually one of the most hot button topics that we've seen many, many times, sheds. It's really a gray area. A shed on a property could be considered a fixture, could be considered like a structure on the property. It could also be considered personal property. Generally, it's like the type of shed, but best practice really just to be thorough and to protect everybody from all of the issues that can arise from a miscommunication, I would highly recommend specifying a shed one way or another. Do they want it to stay? Do they not want it to stay on the purchase and sale? Just to keep everybody on the same page. The other thing that you really want to include here is going to be any appliances that should be left with the property. And again, you want to be specific. You don't want to just say, the appliances that were there at the time of the showing. You want to list out the appliances that the buyer is expecting to stay at the property. And I would even be so specific as to say, gas range or electric range, because, if you saw it with a gas range and then the seller decides to take that and replace it with a cheaper electric range, is your buyer going to be happy? So make sure you're specific here, list the different appliances that are expected to be remaining with the property. Paragraph 12 really doesn't have a whole lot that you need to fill out, but it's still very important. These are disclosures about radon, arsenic, and lead. You want to make sure that your buyer is aware of them. And then there is this one check mark. If the property was built prior to 1978, so not in 1978, but prior to 1978, you're going to select yes, that the lead disclosure is required. If it was built in 1978 or later, then you're going to select no here. Paragraph 13, buyer acknowledges prior receipt of seller's property disclosure form and signifies by initialing here. So A lot of times we see people just have their buyer's initial here without really thinking about what this means. Keep in mind that your buyers should be receiving and reviewing the property disclosure before they place an offer on a property. That is the expectation in the state of New Hampshire, and that is why this is here. So if for some reason your buyer has not seen the property disclosure prior to making an offer, you do not want to have them initial this section. They should be seeing it. You definitely want to find out why if the property disclosures are not available. But do not have your buyer initial here if they have not actually seen the property disclosure. Just because there's a spot for an initial doesn't mean it's appropriate to initial it, so just keep that in mind. Paragraph 14 deals with inspections. So this is a very important section. This is definitely something you're going to want to go over with your buyer, go over with the seller, make sure they understand what they're agreeing to here. So in the state of New Hampshire, you specifically select what inspections you want to have done. They can do anything on one of these lists, or they can write in their own inspection, such as a chimney inspection, and then complete the corresponding information here. So they're going to put yes or no. I would recommend if you're not going to do the inspection, put no. Some people just check off the yeses and leave everything else blank. In my opinion, best practice is to check off no very specifically if you're not going to do the inspection, just to ensure there's no misunderstandings. So you're going to select whatever inspections the buyer wants to do, and then select a number of days that they have to do it. This goes back to that effective date. So the number of days is going to be counted from the effective date, with the effective date being 0, and then however many calendar days corresponding to whatever's been put in here. 7 to 10 days is what we most commonly see, but for a more competitive offer, you might shorten up that time period. If you know there's not a lot of competition, or if you know that you might have trouble getting an inspector in there, you may do a longer time period here. It's whatever time period that the buyer and the seller both agree to. And again, it's counted from the effective date. Do keep in mind that any inspections that are selected here are the only reason that your buyer can legally, or that a buyer can legally walk away from a contract. So if you select a general building inspection in the state of New Hampshire, you cannot walk away because you decided to do a radon air test and the radon air was high. If you did not select radon air quality, that is not a justifiable reason to walk away from a contract. So one thing to keep in mind when selecting the inspection types is really what's important, what's going to be a deal breaker for the buyers. The remaining paragraphs here really just talk about more detail about the inspections. It defines how those deadlines are counted. Right here, it specifies time is of the essence. That means that these deadlines are hard and fast. Time is of the essence means there is not any wiggle room in these dates. So again, keep that in mind. It's, abiding by the deadlines in a contract is very, very important in real estate to ensure that all parties remain protected. This also does specify, so A, B, 1, 2, and 3 here specifies what happens after the inspection in the different possible scenarios. So make sure you've read this, familiarized yourself with it, because you want to make sure that you understand it before you have a client sign it. This talks about how notification for any requests as a result of, or requests for modification as a result of those inspections need to be in writing. And it talks about, the process after any requests are made. So essentially, the buyer has until the deadline in the contract specified above to make any requests as a result of the inspections. Once they've made that request, the seller has 5 days to respond. Once the seller has responded, the buyer has 5 days to respond back to them. This continues in perpetuity until all parties come to an agreement on how the contract is going to move forward. In the event that the buyer decides to forego all inspections in this section, so they're checking no to everything here, they do need to sign this section right here. So this says, in absence of the inspection mentioned above, buyer is relying on buyer's own opinion as to the condition of the property. Buyer hereby elects to waive the right to all inspections and signifies by initialing here. So again, if they waive all inspections, they do need to initial here. This is an additional spot for them to initial. If they did any of the inspections up here, they will not initial this section. This will be left blank. Section 15 deals with the due diligence period. In the state of New Hampshire, due diligence is separated out from inspections, and due diligence is going to be relating to the things listed here. So, insurance is a really common one. Any restrictive covenants, which will likely be listed on the deed, if there are any easements on the deed, if it's a mobile home or a property that's in a park that might have their own rules and regulations, reviewing those rules and regulations. Same with condo deeds, or condo documents rather, association documents. This due diligence period, whatever you put here, again, counted from the effective date, that is going to be the window of opportunity that the buyer has to review all of that information about the property and make a decision about whether or not to move forward. One really important thing to keep in mind is frequently we see people put right here availability of property or casualty insurance and availability and cost of flood insurance. We see them put yes, but then they're not checking with an insurance agent right away on the cost or on the availability of those insurances. This is really a big disservice and honestly kind of a risk. I've seen properties that you wouldn't think require flood insurance, and flood insurance in particular can be really quite costly. So, if you're already outside of your due diligence period by the time your buyer looks into this, you could have kind of an upset client. So I would highly recommend having a conversation with buyers if you're representing the buyer, and let them know that they should really talk to an insurance agent right away. You can't do it for them. So, if they choose to ignore you, that isn't your responsibility, but I would absolutely recommend being in the habit of recommending they talk to an insurance agent right away. Again, this deadline here counted from the effective date, and it can be whatever deadline both the buyer and the seller have agreed to. Frequently, we see that match the inspection deadlines, whatever deadlines they place up here. Not always, but frequently. Liquidated damages, there's nothing that you need to fill out here. This is just a section to make sure all parties read and understand. If the buyer shall default in performance of their obligation under this agreement, the amount of the deposit at the option of the seller may become property of the seller as reasonable liquidated damages. So basically what that's saying is if the buyer defaults in any section of this agreement, the seller does have a claim to that earnest money. It's really important that both parties understand that. Prior statements. So in the state of New Hampshire, contracts have to be written, essentially. If there's anything that is outside of this contract, this is basically saying the contract supersedes it. Financing. So this is going to be where the buyer discloses what type of financing they are using to purchase the property. So this agreement is or is not contingent upon the buyer obtaining financing. Something to keep in mind here. If the property is contingent on financing, that's pretty self-explanatory, straightforward. You're going to fill out the remainder of this section because it's contingent on financing. If it is not contingent on financing, a lot of agents understand that to mean that the purchase is cash. That is not always the case. It could very well mean that a buyer is intending to purchase the property with financing, but that they have an alternative if for some reason the financing goes through. All this means is that they are not making the agreement contingent on financing. It does not mean that they aren't using financing. So that's a really important thing to understand. If you are a buyer's agent and you are checking is not, but the buyer is intending to apply for financing, I would highly recommend making sure that the listing agent understands that, because you don't want them knowing that they probably are interpreting as a cash offer. You don't want them to feel like they misguided you or they misled the sellers. I would highly recommend saying something like, they do have the cash to purchase it. They would rather not use the cash, so they're intending to apply for conventional financing. However, they have the means to purchase with cash, and intend to purchase, the property one way or another. The reason this is important is if the buyer, or if the seller rather, and the listing agent are thinking this is a cash offer, and then they get a call from an appraiser that they weren't expecting, they might start kind of feel lied to, and they are honestly at that point not obligated to cooperate with anything required for the financing. It could put your buyer in kind of a hard spot, and it could also make them less likely to work with your buyer in the event that anything happens or anything comes up. So it's really always better to be transparent in that situation so that nobody feels misled, which can lead to some hard feelings and can make transactions more difficult than necessary. If the if the agreement is contingent on financing, like I said, you're going to fill out the rest of this section. You're going to fill out the amount. So this is commonly expressed as a percentage. So, 95% financing would mean they're going to put 5% down. That's just an example, but frequently this is expressed as whatever percentage of the purchase price they intend to finance. Term and years, obviously you've got most commonly your 30-year mortgages. Sometimes you'll see a 15-year mortgage. There are other terms, but those are the two most common that you'll see. For rate here, frequently we'll see something like current or prevailing. If you do know that your buyer is really tight in the, like, for the loan, or being able to afford the loan, or if we're in, a more volatile market where interest rates may be expected to fluctuate, you may want to put an actual number here, so that, if interest rates suddenly spike, for instance, your buyer is not obligated to purchase a property when interest rates have, increased dramatically, which would have, a pretty significant impact on their ultimate monthly payment. So again, here you can put either an actual finite number, which definitely protects the buyer a little bit more, or you can just put current or prevailing, which means the buyer is willing to move forward at whatever the current interest rate is. Mortgage type here, you're going to get this information. This is actually going to come from the lender, from the pre-qualification letter that they should have provided you. You're frequently going to see, conventional, FHA, VA, USDA. Those are the most common loan types that you're going to see here. So you're going to put that loan type here. And again, all of this information should be right on the pre-qualification letter that you get from the buyer's lender. This section, this paragraph right here, there's nothing specific that you have to put there. Frequently we'll see something like pre-approved by CMG Financial, something like that. Or you might see this left blank. That's honestly also okay. You do want to make sure you've read all of this. There's lots of good information in here about financing. If you do have questions about any of it, you should definitely ask, because there's a lot of really important information. But on to this next section. So this is going to talk about the deadline to submit an application for your mortgage, or for the buyer's mortgage rather. So within X number of calendar days, again, this is counted from that effective date that we established right at the beginning, the buyer is agreeing that they're going to submit a complete and accurate application for mortgage financing to at least one financial institution. This doesn't have to be the person that they or the lender that they provided a pre-qualification letter from, but that's usually who that application is put in with. But keep in mind, it's very important that your buyer apply for a mortgage within this deadline. If they don't, they could technically run into problems down the line if for some reason, their financing was denied, as an example. This next blank right here, this is going to be an actual date. So here in the contract, it's referred to as financing deadline. You're also going to hear it referred to as the loan commitment deadline. This deadline is the date at which the lender essentially has to provide written notification that they will not be able to complete financing in order for your buyer to remain protected. So if for some reason something is going to go wrong with the financing, the lender needs to provide that information in writing prior to this deadline. Once this deadline passes, the buyer is no longer protected if something happens with their financing. So I can do an entire video about the financing deadline and why that is important. But the most important piece to remember is, if there's anything significant outstanding on a loan as you approach this deadline, if you're representing the buyer, you want to make sure to try and get this extended or have a conversation about how to best protect your buyer. Keep in mind, you're always going to have a couple things on a loan commitment letter that they're just not going to come off prior to closing. A lender is always going to do a last minute credit check. They're always going to do a last minute employment check. Those things are going to be on a loan commitment as conditions pretty much right up until closing. But if you're seeing something, if you're getting close to this loan commitment deadline, which is frequently about a week prior to closing, but if you're getting close to this loan commitment deadline and you see something significant on there, like, verification of income or the appraisal is one that commonly can cause some issues with loan commitment. You're going to want to talk to your buyers and the lender and the listing agent about potentially getting an extension on this financing deadline, just in order to keep your buyers protected. There is lots more information here about what happens in different financing situations. Read this and understand it. Like I said, I should actually probably record an entire video just about the financing deadline. There's a lot of important content there, but definitely make sure you've read through this and understood it. Wire fraud alert. This is actually something that our office requires people to initial separately. So we have a whole separate document about this, but they also need to initial this section here on the purchase and sale, both the buyer and the seller. Basically what this says is do not comply with email requests for wiring money. Unfortunately, people have gotten very, very good at fraudulent wire requests. And as a result, people have lost money. And as a result of that, we now have this wire fraud alert right on the purchase and sale, letting people know that do not ever wire money from an email request. Confirm it over the phone with someone that you know and trust first. And finally, so here are additional provisions. Honestly, I've seen all of the things in additional provisions. There's really nothing specific that may or may not be there. Some of the most common things you might see is if the purchase and sale is going to be contingent on, say, the appraisal coming at least purchase price. You're going to see that in additional provisions. If you have a buyer who's going to pay above and beyond the appraised value, you're going to see that in additional provisions. If you have a buyer or a seller that either needs to find suitable housing or needs to sell a home in order to purchase, you're going to see that in additional provisions. So there's a huge variety of things that can be here in the additional provisions section. Something that's going to be really important to keep in mind is, whenever possible, try to use things that have been written previously and are in the Market Center Clause library. Those are frequently things that have been written by an attorney. They've been reviewed many, many times. They're going to be generally pretty well written. If for some reason you have to write something yourself, the things that you are wanting to keep in mind, make sure that it is time bound. Make sure that there is a deadline for whatever it is that you're writing. You do not want to write something that essentially has no deadline and puts either the buyer or the seller at risk. You want to make sure you're very specific about who is responsible for what costs. You're going to want to make sure you have something that covers what happens if, said scenario doesn't actually happen, what happens in that event. So writing clauses should be very specific and very thorough. And if you ever have questions about it, I would absolutely recommend bringing in Mark or bringing in the director of operations and get their input on what should be in this section or how it should be written. Addenda attached is going to be if there are any additional addendums. Again, I think that's pretty self-explanatory, but you're going to put yes or no and you're going to list whatever they are. Here you might have something like seller suitable housing addendum. You could put the lead paint addendum, although it's not necessary to attach that to the purchase and sale. You might have just like a general addendum that was written out for one reason or another, and in that case, again, you would put yes and you would specify what the type of addendum is. And then here in section 21, this is where it defines the effective date that we talked about right at the beginning. So again, read through this, make sure everybody understands it, but we did kind of cover that briefly at the beginning. To go through compliance, real quick on this form. We're going to scroll right back up to the top. So the big things that compliance is looking for, you need to make sure you have an effective date here. Again, almost everything on this form should be filled out. There should be very few blank spaces. You want to make sure particularly that the seller's name is filled out correctly based on whatever is on the current deed for the property. The book page, these two definitely need to be correct, again, based on whatever is currently recorded for the property. Obviously, you want to make sure the purchase price is correct. For the transfer of title, that does need to be an actual date. You cannot put TBD or anything like that for the date itself. Location can be TBD. The date has to be a finite calendar date. Representation, the names and the agencies of all parties does need to be correct. That is something that the Market Center will check. And then at the bottom of each page, there needs to be initials by all sellers and initials from all buyers. So you'll see that at the bottom of all of these pages. The wire fraud section absolutely needs to be initialed by both the buyer and the seller. And then page 5 needs to be signed by all buyers and all sellers in order for this to be a fully executed document. The other thing to keep in mind is that if any changes were made in the course of negotiation, so something on here was crossed out and changed, all parties, all buyers and all sellers do need to initial that change somewhere near the initial or somewhere near that change on the purchase and sale itself. If a change is made and not initialed, that will be kicked back by compliance because all changes need to be acknowledged, and the way to do that, the way to acknowledge them and make sure that all parties have agreed is to make sure that they are initialed. So that's another thing to look for. If anything was changed, that should be initialed. As far as compliance goes, they are going to check this and make sure that the yes or the no matches the year of the property. And again, yes is going to be prior to 1978, no is going to be 1978 or later. This section, just making sure that it's filled out properly. No inspections are required, so it could very well say no everywhere. But if that's the case, you do need to make sure that this is initialed for compliance purposes. This could be yeses or nos. Again, it's entirely up to the buyer and well, also what the seller will agree to. So it's not necessarily a correct or wrong thing here. Financing, if this is checked yes, everything else here needs to be filled out in this financing section. If it's checked no, nothing below that in section 18 needs to be filled out for compliance purposes. And then, yeah, that's pretty much everything that you're looking at as far as compliance. If something is ink signed, it does need to be dated in addition to signed. So if you see something that's just signed and not dated, that is something that will be flagged by compliance. If something is electronically signed, I believe all electronic signature platforms automatically date signatures, so it's less of a concern there. I think that is everything as far as the purchase and sale agreement goes. If there's anything you ever have questions about, again, don't hesitate to ask Mark, to ask Michelle, ask someone on the team to get clarity. This is one of the most important documents involved in a real estate transaction. It's really important that you understand it before you have your clients sign it. So have a great day. Thank you so much.